Today, we released our semi-annual economic outlook, which we produce in order to try to help our clients understand the big forces that are going to be impacting on their businesses over the next 2.5 or 3 years. We are looking at very modest growth going forward, and we are looking at governments making major investments during this period in infrastructure in order to try improve productivity and buttress the ability of private industry to make the appropriate investments that will raise productivity and hence raise Canadian incomes. And finally, very importantly, for business, we look at what the trade environment is likely to be over the next little while. And we do this with some trepidation in light of the political uncertainties, in particular south of the border. We are in the process here in Canada of labor force growth slowing, and that simply means that there are going to be fewer people in the labor force producing, so that automatically reduces aggregate growth rates, total growth rates, unless we can boost the productivity of those people that are in the labor force. Earlier, in our projection is for Canadian economic growth in the second quarter to be negative, maybe minus 1%. And essentially, what we're saying is that outlook is not changed dramatically from the outlook we had last fall, and that over that period, the sort of baseline is that the world economy will grow at about 3% per year. We examined the impact of the shock that has occurred because of the dramatic drop in oil prices that started at the end of 2014. And so expectations of oil prices going forward are now much lower than they were in 2014. Big shocks like this create necessity for big adjustments in the economy. Those adjustments don't come easily. They never do when you have big changes in relative prices. Offsetting that a little bit is that there's a big drop in the price of gasoline, home heating oil for consumers, so consumers have a little bit more to spend on other things. And so we lay great emphasis on the fact that government has a very important role here to play in selecting the infrastructure investments they make, to select those things that will enhance the productivity of people and enhance the productivity of private investment. And if those are chosen wisely, then we will A, get more private investment, which will raise national income, and B, we will get more productivity, which will raise national income to offset some of this loss, or more than offset some of this loss that we've had from the decline in natural resource prices.